How to make big money with NFT investments in 2026. The world of non-fungible tokens, NFTs, has transformed from a niche digital curiosity into a powerhouse of wealth creation. And 2026 is poised to be a pivotal year for savvy investors. NFTs, unique digital assets on blockchain, offer unparalleled opportunities for those who understand their potential and navigate the market strategically. This essay will guide you through the essential steps to maximize your profits with NFT investments, focusing on market trends, strategic selection, and risk management to ensure you're not just participating, but thriving in this dynamic space. Understand the evolving NFT landscape. To make big money with NFTs in 2026, you must first grasp the market's evolution. NFTs have expanded beyond digital art to include virtual real estate, gaming assets, music, and even tokenized physical assets. By 2026, expect deeper integration with the metaverse, where NFTs will represent ownership of virtual land, avatars, and exclusive experiences. Research platforms like OpenSea, Rarible, and Emerging Layer, two solutions like Immutable X for lower fees and faster transactions. Stay updated on trends through X posts and industry reports as the market shifts rapidly. For instance, recent discussions on X highlight a surge in demand for utility-driven NFTs, such as those granting access to exclusive events or DeFi protocols. Knowledge of these trends is your foundation for spotting high-potential opportunities. Identify high-value NFT projects. Not all NFTs are created equal. To maximize returns, focus on projects with strong fundamentals. Look for NFTs backed by reputable teams with transparent roadmaps. Check their X profiles or LinkedIn for credibility. Projects tied to established brands or creators with a loyal following often have higher resale potential. In 2026, gaming NFTs, like those in play-to-earn ecosystems, are projected to dominate due to their utility and community engagement. Evaluate the project's community strength on platforms like Discord or X. A vibrant, active community often signals long-term value. Avoid hype-driven projects with no substance, as they're prone to crashes. For example, in 2025, data showed that NFTs with clear utility, like staking rewards or governance rights, retain value better than purely speculative assets. Timing and market entry. Timing is critical in the volatile NFT market. In 2026, macroeconomic factors like cryptocurrency adoption and regulatory clarity will influence prices. Monitor Bitcoin and Ethereum trends, as NFT prices often correlate with these assets. Use tools like Dune Analytics to track trading volumes and floor prices on major marketplaces. Enter during market dips when quality NFTs are undervalued, but avoid buying into fear of missing out, FOMO, spikes. X posts from industry insiders can provide real-time sentiment. Watch for signals of upcoming drops or partnerships. For instance, a recent X thread emphasized the profitability of early investments in blue-chip NFT collections like Bored Ape Yacht Club during their initial mint phases. Patience and discipline in timing can multiply your returns. Diversify and manage risk. While the allure of a single moonshot NFT is tempting, diversification minimizes risk. Allocate your capital across different asset types: art, gaming, virtual land, and varying price tiers. Set a budget and stick to it. Never invest more than you can afford to lose. Use hardware wallets to secure your NFTs and avoid phishing scams, which remain prevalent. In 2026, expect stricter regulations around NFT marketplaces, so verify platform compliance to protect your investments. Hedging strategies, like staking-related tokens or holding stablecoins, can balance portfolio volatility. Recent X discussions warn of rug pulls in new projects, underscoring the need for due diligence. A diversified, cautious approach ensures you're positioned for gains without catastrophic losses. Leverage community and resale opportunities. NFTs thrive on community hype and secondary market sales. Engage with project communities to gain insights on upcoming features or collaborations that could boost value. Flip short-term holds during hype cycles, but retain high-conviction NFTs for long-term appreciation. Platforms like Blur offer advanced trading tools for quick flips, while fractionalized NFT ownership via platforms like fractional.art lowers entry barriers for premium assets. In 2026, expect cross-chain NFT marketplaces to gain traction, enabling broader liquidity. Monitor X for real-time buzz around new drops or celebrity endorsements, which can spike demand. A strategic mix of holding and trading maximizes profit potential. Stay ahead with continuous learning. The NFT space evolves at breakneck speed. Commit to daily learning through X, industry blogs, and white papers. Understand emerging technologies like AI-generated NFTs or cross-metaverse interoperability, which are set to redefine the market in 2026. Experiment with small investments to test strategies without overexposure. By staying informed and adaptable, you'll spot opportunities others miss. For example, early adopters of music NFTs in 2024 reaped massive returns when major artists tokenized albums, a trend likely to accelerate. Conclusion: making big money with NFT investments in 2026 demands focus, strategy, and discipline. By understanding market trends, selecting high-value projects, timing your entries, diversifying wisely, leveraging community dynamics, and staying educated, you can turn the volatile NFT market into a wealth-building engine. The key is to act decisively but cautiously, using every tool at your disposal, from analytics to X insights, to stay ahead. The NFT gold rush is far from over. With the right approach, 2026 could be your year to strike it rich. Close your eyes for a moment, not to sleep, but to dream. Dream of a digital token, a string of code, selling not for a few dollars, but for millions. A piece of art that doesn't hang in the Louvre, but lives on a blockchain, accessible to anyone, yet owned by one. This isn't a fantasy from 2021. This is the potential future of 2026. But let me be clear, the gold rush is over. The era of easy money, of slapping a JPEG online and watching it sell for a fortune, is gone. The landscape has evolved, and that is our opportunity. The question is no longer if you can make big money with NFTs. The question is how you will navigate this new, sophisticated frontier to build genuine wealth in 2026. So, how do you position yourself for that seven-figure win? You must master 3 new pillars. Pillar 1, the shift from speculation to utility. In 2026, the most valuable NFTs will not be static pictures. They will be dynamic keys. They will be your membership to an exclusive community of innovators, your backstage pass to real-world events, your deed to a virtual property in a thriving metaverse, or your license to a character in a blockbuster video game. The money will flow to assets that do something, that provide ongoing value. Ask yourself not, is this art pretty? But what doors does this key unlock? Pillar 2, the rise of the phygital bridge. The line between our digital and physical lives is blurring, and the biggest profits will be made at this intersection. Imagine owning an NFT that also grants you ownership of a physical prototype, a limited edition sneaker, or a share in a real-world startup. This phygital link adds a tangible, defensible value that pure digital art cannot replicate. The most successful investors in 2026 will be bridge builders, connecting blockchain value to real-world assets. Pillar 3, the power of data-driven conviction. Gut feelings are for gamblers. Investors use data. In 2026, the winners will be those who can read the blockchain like a financial statement. They will analyze trading volume, track whale wallets, understand royalty structures, and assess community health through hard metrics, not just hype. They won't follow the crowd. They will use on-chain analytics to see where the smart money is flowing before the crowd even arrives. But knowledge without action is just a daydream. So, here is your call to action. First, immerse yourself. Spend the next month not as an investor, but as a student. Join Discord servers. Follow the builders, not the influencers. Understand the technology of Ethereum, Solana, and the emerging chains. Second, build your thesis. Decide which of these pillars, utility, phygital, or data, resonates most with you. Specialize. Become an expert in that niche. And third, start small, think big. The goal for 2026 is not to find 100 small wins. It is to identify the 1 or 2 projects that have the foundation, the team, and the vision to become the blue chips of the next cycle. Allocate your capital not with the desperation of a get-rich-quick scheme, but with the patience of a collector building a legacy. The noise of the market will try to distract you. The fear of missing out will try to rush you. Ignore it. The real fortune in 2026 won't be made by those chasing the last trend, but by those who are building the next one. The digital Sistine Chapel of 2026 hasn't been minted yet, but the artist is already coding. The question is, will you be just another spectator, or will you be the one who owns a piece of history? The floor is yours. Your research begins now.